Good Monday morning from London. I'm Guy Johnson. I'm alongside Kriti Gupta. We are an hour away from the opening trade. Here's what you need to know. Watch European mining and luxury stocks at the open. Chinese equities and industrial metals have been soaring overnight as we get even more government stimulus. European auto stocks, though, looking like they're going to have a tough start. Stellantis cutting its outlook following a similar move by Volkswagen on Friday night. Oil is steady. The world is watching to see how Iran will respond to Israel's killing of Hezbollah leader Hassan Nasrallah. Kriti.
In the meantime, a quick check on these markets, at least here in Europe. You are seeing that risk rally really isolated, at least into Chinese stocks. That pull down into perhaps some of the automakers that we were talking about, Guy. Perhaps that bleeding into the risk sentiment pointing to the downside. Eurostoxx 50 futures down 0.1%. FTSE 100 right on its heels as well. Eurodollar at 111. Cable stays strong, right on the cusp of 134. The countdown to the opening trade starts right now.
Monday, the 30th of September. Welcome to the program. Good morning, everybody. We are setting ourselves up for a really interesting week. Monday morning is not disappointing even. We have plenty of price action that we need to digest here in Europe, out of Asia. Chinese equity markets have been on a tear once again as that country heads into an extended holiday. And we are seeing industrial metal, particularly iron ore, absolutely surging, Kriti.
Yeah, it's a fascinating one as well, because when you look at I think 8% rally at the moment on the Chinese stocks, that doesn't exactly scream healthy risk rally, does it? So I'm curious how much of this seems some sort of pullback in the coming days.
Absolutely. That was the question we were asking Friday. That was the question we were asking Thursday. The equity market is up aggressively over the last three sessions. Actually, it kind of started sort of Tuesday, and then I guess Thursday was probably the second day of it last week. Then we see a continuation into the holidays. Yes, you could argue, and I take your point, that is this a healthy rally, given the fact that once you start seeing government stepping into risk assets, maybe you start to worry. But maybe it was just simply that Chinese equities, Chinese risk assets had got so underpriced, were so beaten down that any kind of a spark was going to set them alight.
It's an interesting one because even though we are seeing this risk rally in China, we're seeing the exact opposite in Japan. I think this is an interesting one, that this is not an APAC region-wide specific rally that you're seeing, which really stands out because when you do see that Chinese risk sentiment turn, it tends to take the whole region with it. This time, it looks like Japanese politics getting in the way.
Japanese politics Friday, we saw the LDP election. That seems to be good news for the yen, bad news for Japanese equities. So you've got kind of on a positive story on one hand, but not a positive story on the other. Chinese equities definitely wrong-footed by this trade, but they don't feel like they have the global influence that Chinese equities have. And you think about how European mining stocks are going to open this morning. Is that the way to play the China story? You look at what is happening with the Chinese luxury trade. Is that the way to play the story into Europe this morning? That's the question that a lot of portfolio managers sitting down this morning in Europe have got to try and answer.
Well, that and then squaring it with some of the Japanese monetary policy as well, because you have to still kind of fold into the fact that the BOJ, given its headline, is still at odds. We are getting a headline, I should say, crossing the Bloomberg terminal on Mr. Shiba, saying they're aiming to hold the general election on October 27th.
That was anticipated. He needs a mandate. We are now going to see that general election. Do you hold fire? Maybe that's another factor into the Japanese equity story as well. Do you now need to wait on the anticipation that we are going to see this general election, confirming the date now, October the 27th?
And we should make the point as well that off of, I think, the risk sentiment that you're seeing this morning, you are seeing weakness in the dollar. Dollar yen at a 141 handle. So you're actually seeing strength right now in the Japanese yen. Is that simply paring back some of the moves we saw on Friday? I don't know.
Well, yeah, so the story for Japan is one potentially of strength here. The BOJ now has the potential to raise rates in the way that it wouldn't necessarily have done. So now we're going to see yen strength, but potentially equity weakness. Let's come back to the Chinese story and the impact that it's having in terms of the European space this morning. We've already talked about the mining names and the luxury names. They could be beneficiaries of what's happening in China this morning. The big loser of late has been the auto sector. We saw the warning Friday from Volkswagen. Yes, they've got European issues that they need to deal with the EV space, but it's also Chinese weakness. We're now getting a second warning coming through this morning from the giant Stellantis. It's also downgrading its numbers how hard will the European auto sector be hit this morning?
Well, just for our international audience, let's put these numbers into context here. Volkswagen, you talked about their second profit cut. It went from 7.5% in July to 7%, and now all the way down to 5.6% on that operating margin.
Yep.
These are, I'm going to pull a Tom Keene here. You look at that second derivative, the declines are steeper and steeper.
Yep. The next question I think you need to ask, though, is this as bad as it gets? If China is stimulating, if we are going to see demand, and it's not just Volkswagen, it's not just Stellantis, Mercedes, all the German automakers have been out warning about what the story looks like, particularly in China. But if China's turning around, is this as bad as it gets? Is China about to ride to the rescue of the European auto space? Also, there's another kind of element to this story. If we're going to see consumer demand picking up in China, does that take out some of the excess capacity that the world had feared would be dumped into other markets around the world as well? So there's a China component, a very strong China component to this narrative too.
And it weighs on the price-making ability. And actually, that's something that our Oliver Crook, our German correspondent, of course, has been pointing out. If you look at some of the commentary in the IFO data, for example, fewer and fewer companies in Germany looking to raise their prices. That immediately has an effect. That operating margin is really a function of that pricing story.
Aston Martin, the latest car company of a different scale in terms of its magnitude. Aston Martin seeing 2024 adjusted EBITDA, quote, slightly below 2023. The auto sector firmly in focus this morning. Let's turn to, though, the big news, the geopolitical news over the weekend. The killing of the Hezbollah leader. We've seen further attacks this morning being driven by Israel, hitting Houthi targets. The question now, and I think the oil market is on tenterhooks waiting to see what's going to happen here, is how do the Iranians respond?
How do the Iranians respond? Is there a next step from Israel as well? Remember, there's still a concern around a ground incursion as well, similar to that of what we saw in Gaza as well. And we should point out that decision has not been made. There's no indication that it will happen. But there is still a question of whether or not that's the next step from Israel. And will that be kind of what provokes a response from Iran, to your point? But this is a big deal when we're talking about the scale. This is not something that is equal to what we're seeing in Hamas. This is at an even larger scale when it comes to the hit that Iran has to its militia network.
Absolutely. Hezbollah, front and centre in its fight to contain Israel. And the decapitation that we've seen of the leadership, and it started days ago and it has continued, this sort of concerted attack that we've seen from Israel has been delivering a huge benefit, you could argue, from an Israeli point of view. How does Iran respond to that? There's no indication at this point that we are going to see a significant response, but when we do see one, could it affect global trade? Could it affect the global oil market? The Saudis are going to be watching very carefully. This becomes a regional story very, very quickly, and the world is going to need to pay attention to that response.
You mentioned the Saudis. Remember, we're also just weeks away from a U.S. presidential election as well, where one of the key pillars for Donald Trump has been how tough he was on Iran. Remember, the Biden administration, arguably the Kamala Harris administration, if there is one, will perhaps be a little bit more focused on what the nuclear rights around that look like. So there are, to your point, global ramifications that we're going to see. When it looks to the markets, though, it looks like there's perhaps a risk overhang, but not major market reaction off of this news.
Not yet. Not yet. We'll watch very carefully. What does the European auto story do to the European data? What data are we going to have to watch out for as we think about whether or not we should be pricing an ECB October cut? Silvia Adania, Barclays chief European economist, is going to be joining us. We also need to focus as well on what is happening with the China trade into Europe. We'll get another take on that. Diana Choyleva is going to join us from Enodo Economics. We'll get her take on this latest stimulus story. To Kriti's point, does it stick? Marcus Poppe, DWS European Equities Co-Head, is going to be joining us. We'll talk about the European auto story there. We'll also talk about the latest as to what is happening maybe with the banking sector in Germany too. We are going to be joined a little later on in this programme by South Africa's Deputy President. Paul Mashatile is going to be joining us in the studio for an exclusive television interview. That economy back on the front foot right now. They're keeping the lights on. That is critical. We have a budget coming up next month. There's also a lead into what is happening, Kriti, here with the Hamas story as well. They've launched an ICJ case, the South Africans. What is the latest news do to that case? Does it augment it? Does it feed into it? We'll ask that question to Paul Mashatile a little bit later on.
Yeah, and as you talk about the budget, as you talk about perhaps the country's rebound from some of the troubles that they've been going through, there's a currency component to it. The other side of that, of course, driven largely by the central bank speak that we're going to get throughout the week, which relates us nicely into what we're expecting just today. Fed's Powell speaking, of course, at a conference. We're going to keep an eye on what he's saying. Of course, all markets are going to keep an eye on that ahead of the payrolls number on Friday. But it's not just Powell. Lagarde is speaking as well in EU parliamentary dialogue. We're going to keep an eye on that. And then we're going to keep our focus on China, not necessarily because the market moves. The market will be closed, I believe, for Golden Week. It starts tomorrow. So do we see some of this green on the screen stick around by the time the markets do come back? That's going to be something we keep an eye on. Plus, plenty of data throughout the week. We've got PMIs coming out of the Euro area on Thursday. But then I think it's still that big story about payrolls on Friday. That's the countdown we're keeping our eye on.
Absolutely. I just want to flag as well that UK Q2 GDP up 0.5 quarter-on-quarter, the estimate 0.6, so that's a slightly softer number for the UK. I think the payroll number is the big number of the week in terms of the data. Yes, Powell's going to be speaking to business economists. The NABE story is going to be one you're going to watch out for. But what happens on employment? I think it's going to be critical. On unemployment. What happens if unemployment goes down? The market's on a coin toss at this point as to whether or not the next move from the Fed is 50 or 25. How does the equity market, how do risk assets react if we get 25, not 50? And is the payroll number, the employment component of it, the unemployment component of it, going to tell us as to which way we're going to go? Well,
Powell and his peers have gotten quite lucky in the fact that the payrolls number has come in tandem with a lot of the other data. They've all been in sync. But how many times have we seen over the summer where the payrolls number says one thing, consumer confidence says another, the services PMI say something else? And I think that's where you start to see the real tension. Of course, we do know we did have, it wasn't a consensus vote when it came to the 50. So we'll see what that dissent actually looks like this time around.
The data are getting quite unclear, though, because you've got a whole load of other factors to focus on. You've got the immigration story, which is really difficult to determine in the United States as well. We're also not getting that cleaner data at the moment because of what's been happening with the weather. A lot of this data is hurricane affected. We've now got another story that we need to fold into that as well. So let's update you on what you need to know this morning as to what is happening around the world. Floodwaters threatening more damage in Georgia and in South Carolina this morning as the U.S. continues to reel in the aftermath of Hurricane Helene. The storm has killed at least 84 people and has left millions without power. Flooding and destruction caused by the storm is estimated to have hit up to $110 billion. US East and Gulf ports are bracing for shutdowns as government and industry officials urge dock workers and their employers to avoid strike action. Talks have stalled since June and work contracts are due to expire at the end of today. US President Joe Biden says he will not intervene as resolving the dispute is a matter for collective bargaining. JP Morgan estimates the strike could cost as much as $5 billion a day. And Austria's far right has won the most support in the country's election over the weekend, but is without enough seats to form a government. Rival parties are refusing to work with the Freedom Party, leaving it stranded after winning 29% of the votes. The Conservative People's Party and the Social Democrats look set to form a coalition government instead. This is a story that is playing out across Europe.
It is, and this is something we saw in Germany. We saw elements of this in France as well. We're seeing in other, the Netherlands, Belgium as well. I think what's interesting about this particular story, and we saw elements of this in the state elections in Germany as well, this is a party that is far more friendly to Russia as well, that is taking migrants there, Russian migrants there. It has a big kind of voting populace there as well. What's important as well is this is an anti-migrant government. This is, I think, crucial because we're talking about an economy here that is still very dependent on Russian gas. We're talking about an economy that is kind of stagnant in terms of being able to have any budget decisions. You're not seeing the same thing in other parts of Europe in terms of the economic effects or that dependency on Russia, but this is certainly one to keep an eye on as perhaps a canary in the coal mine.
Yeah, there are multiple canaries now, you could argue, in the coal mine. And the immigration story is one that Europe is going to struggle with and continue to struggle with and is yet to find a way around. You can argue what's happening in the Middle East right now could make that story even more difficult. If you see serious numbers of people being displaced in Lebanon, maybe some of that flow comes towards Europe as well. So just factor in that narrative around Greece and how that eastern sort of flank of the European Union is going to potentially have to deal with another surge of migrants. We've seen it in the past. Again, this just speaks to this immigration issue that Europe is desperate to find a solution to and is really struggling to do so. But then you fold in the kind of what is happening on the economic front. Europe is stagnating. It needs migrants. it's just got to find a better way of dealing with it.
Well, this is the issue you're seeing in the Netherlands, right? That ASML, for example, said, look, we need that labor.
Yeah.
And if you stop that, we can't help grow our company to the scale that it perhaps needs to grow. It's something you're seeing certainly in Germany as well. We've seen it with plenty of the automakers, as we were discussing. Yep. And another piece of that is simply going to be as well is Germany, I read somewhere, has, I think, the third largest immigrants per capita that you've seen relative to the United States and Saudi Arabia. This is something that they could be looking across the border, Austria, and saying, we're not alone in our views when you look at kind of that far-right view.
You could look across the border to the Netherlands. You could look across the border to Belgium. You could look across the border to France. This is a story that is playing out across much of Europe. Springer Nature, maybe I should probably be saying it that way. The IPO is likely to price at $22.50 a share. We don't do those kind of headlines very often.
No.
An IPO.
We don't, but I think this is important. Look, it's $22.50 a share. The context is crucial here. This is a big publishing company, primarily academic. I mean, previously seen between $21 and $23.50. So it's kind of falling within the range. We'll see if that changes as the morning goes on.
Absolutely. What are we going to talk about next? Volkswagen's second profit warning in 3 months. What are we expecting from its share price as we start trading here in Europe? Probably need to fold in what as well is happening with Stellantis this morning. We'll keep an eye on the auto sector. Plus, why the far right in Austria is unlikely to play any role in the new government despite winning that historic election victory. We've just been discussing it. We'll get more details next. Plus, the story we were all focusing on. That recent strength in China, what could it mean for the European economic outlook? We will discuss that next. Any questions for the show? Any questions for Kriti and me this morning? Any of our guests? IB+, BBTV Go is the function. You can get in touch. Join the discussion. This is Bloomberg. ...40 minutes to the equity market open here in Europe. It's interesting that actually we are seeing quite a lot of red in terms of the futures picture. Keep an eye on what is happening with the luxury trade this morning. Keep an eye on what is happening with the miners. It's going to be interesting to see what happens with London in particular this morning. Iron ore is up aggressively. However, you've also got to fold in the grim news we're getting from the auto sector this morning. You got it Friday from Volkswagen. This morning you're getting it as well from Stellantis. Downgrades are coming through. So some countervailing forces maybe at work in terms of the equity market open here in Europe. Chinese equities, though, into the holiday, extending their gains. Regulators unveiling new measures to support the economy. What's the read across into the European space? Silvia Adagno, Barclays chief European economist, sitting around the table with Kriti and me this morning to discuss. Good morning.
Good morning.
The Chinese finally have pulled the trigger. We're seeing significant stimulus coming through. How quickly, of what magnitude should we be thinking about in terms of how that's going to affect Europe?
Well, the stimulus is certainly a very welcome news, but we interpret that as being maybe more limited in terms of its impact on Chinese growth for the moment. It's positive, but we don't think it's a game changer. It is going to lift growth in China by something like 40-50 basis points. As a result, it's not going to be, any massive boost for European export as well. It's also not clear how the fiscal part of the stimulus will really impact on the consumption side. Now, what we think is more positive on the stimulus is the signal that the Chinese policymakers are aware of the difficult situation the country is, of the risk of deflation, and so we expect that they could do more later on in October. If that's the case, then we might see a more significant impact on European growth. But I would say we need to remind that China is becoming more and more a competitor of Europe rather than a market for destination of European goods.
OK, that's an interesting point that we need to, and we'll come on and talk about the auto sector in just a moment. You now expect, and you changed your call Friday, that the ECB is going to deliver in October. We are going to see a rate cut coming through. What changed your mind? What was it that factored into your thinking in terms of making you think that the ECB needs to pull the trigger on that cut?
The quantum of economic data that we're pulling in that direction. The ECB told us that they're data dependent. We think even after the September meeting, we kept October live, and we have seen the PMIs deteriorating. They're now pointing toward the contraction. The momentum is very weak. European Commission survey data also corroborate this evidence of stagnation in the euro area. And then we got the inflation data from some of the European countries that surprised on the downside. Headline inflation, we think, should print a 1.7 tomorrow. And because of the energy market, we revised inflation down for the entire 2025, which should stay slightly below 2% for an entire year. So we are going from a situation where 2% was going to be hit at the end of 25 to one in which 2% has basically been hit already.
So what's the solution to that then? I mean, you're hearing various budget conversations are expected to happen in the next couple of months. What's the solution? If you give her one recommendation, what would that be?
Look, the budget problems are one in which we don't expect much of austerity to be done this year. And I think in terms of recommendation, that would be relevant given the fact that the European economy is already quite weak. Yeah. But certainly fiscal risks remain very elevated for some of the countries. So this government should present credible plans to the European Commission to avoid the bond market vigilantes to wake up.
So over the weekend, there was a report in one of the French newspapers about the French considering a tax on the corporations, about over 8% for companies that make over $1 billion in revenue. It might be something we see at the market open today in terms of getting priced in. Is that enough? Does taxation solve a lot of these problems in terms of austerity, or does it do more damage?
It's a very good point. I mean, I did a lot of this academic work in many years, and definite taxation is not the way to go. The best way, or the least, I would say, damaging way to do fiscal austerity is to cut the spending side of the budget, not to increase tax rates, because that will provide less of a negative impact on growth. So, but clearly, politically, it seems to be very difficult to go ahead and cut the spending side of the budget, particularly in France.
European auto sector, how big a problem is it? If you think about the ripple effect through the supply chains, manufacturing looks like it's in real trouble right now in Europe. Do we need to see help? Is this a sector that is so important to the European economic data that we see on our screens every day that the German government, that the European governments at large need to think about what they're going to do to protect it, to support it?
I think, the Draghi report gave very, very wise recommendation and very ample recommendation on what government in general should do to support their economies, and certainly is not to give specific, subsidy to a specific sector. It's a problem for the cyclical outlook, and the way we look at it is it has already showed a very big contraction on the output side, but employment so far has still hanged out quite good. But if the weakness in production now translates to firing workers or not hiring to the same pace, and we would see unemployment going up, that obviously is a big concern for Europe.
30 seconds. You talked about pulling back on some of the spending. How, if we're talking about the employment dynamics that you just outlined?
I mean, in many of the European countries, the situation is the pension situation and the transfer situations, the welfare state is definitely very large. So these are political choices. I think what is worrisome is that in many countries, and France in particular, we see proposals to unveil some of the pensions reforms that have been done. Yeah. And this would be a very negative political policy move, because it will impact the budget for many years to come. I mean, demographic is quite daunting in Europe, so we should think about extending, the retirement age and not, pulling it back.
A fascinating conversation, a lot of different threads. Sylvia Ardagna will leave the conversation there, the Barclays chief European economist, joining us around the table this morning, digesting some of the news and perhaps the intersection of what we're seeing in China, Germany, France. It is all related. Coming up, we're going to dive a little bit more into some of those moves, specifically in Chinese stocks, after some of the country's largest cities ease rules for home buyers. We're going to discuss the economic outlook. Diana Choyleva of Enodo Economics joins the program next. Is this move we're seeing in the market sustainable? How long can the stimulus actually last? We're going to put those questions to her. Stick with us. This is Bloomberg.
30 minutes from the final day of the September trading session. We've got 30 minutes to the opening trade. European equities looking fairly mixed, actually, this morning. Flattish. There's some big forces at play, though, below the surface. China stimulus feeding through into European stocks, plus also the auto sector firmly in focus. We've had warnings coming through Friday from Volkswagen. We now get another one this morning, Kriti, from Stellantis. What's caught your eye this morning, though?
Well, I think we just need to put this China move into some perspective here, because I think we hear a lot, these headlines, that China's employing stimulus again. They're reassuring the market, and it works for about a minute. But here's why this matters, Guy, because we looked at a market that was closing almost 8% higher. And what's significant is that on a larger time frame, it's just a blip when it comes to the chart. But I think this surge, which is what you're seeing in this bottom panel here, is really important, because look at the margin of the move. The last time we've seen this kind of volatility, these kind of moves to the upside, which may be followed by moves to the downside, we have to go all the way back to 2015. And then furthermore, for the one that's interesting to me, is back in 08. Now, what happened in 08? What happened in 2015? It has a lot to do with this idea of recession, of infrastructure. In 2015, we know a lot of that was around the retail kind of ownership of the Chinese market. We know had to do with devaluation. But in 08 is when you saw Chinese infrastructure packages actually stimulate the global economy. And Guy, I'm curious if that's where we are. Is that where we're headed when it comes to this Chinese stimulus?
It's really hard to tell at this point in time. We need to get some analysis on what is happening here. What I find fascinating this morning is that Chinese equity markets have absolutely surged. As Kriti says, we are seeing a little bit of a fade as we head in towards the end of the day, but nevertheless, a very solid session. European equities don't feel like they're following through. There's a lot of different forces at play. You've got the politics. We've been talking about what's happening in Austria, but we also need to mention the auto sector. That story may be a bit of a break on the European equity story this morning. But are the miners going to do well? Is London going to do well on the back of this? And the big picture that we're really trying to figure out is this significant? How significant is it, the stimulus story we're getting from China? Let's get some analysis now. Diana Choyleva, Enodo Economics, Chief Economist, why am I saying European? Chief Economist joins us now. Good morning.
Good morning.
What do you think? Does it stick? Is this big enough? Is this a game changer for China?
It's a big U-turn, and it is a game changer, and not just cyclically and for the remainder of the year to achieve that 5% growth target, but Beijing has addressed some fundamental issues here, which a lot of analysts have focused on sort of calculating the size of the stimulus. But I think what's even more important is the very fundamental change in the rhetoric, if you'd like, that was, I mean, unexpected from Xi Jinping's point of view. And what I mean here is the type of rhetoric and measures that would actually address this nebulous issue of weak consumer and private entrepreneur confidence.
So what do you think has changed? Is it the fact that they're talking more about quality jobs for the youth? They're talking about changing the youth unemployment story. They're talking about changing the housing story in a way that they haven't tried yet. What is it in particular you think that is different here in terms of the rhetoric that signals an understanding maybe of the underlying problems with that consumer confidence?
Well, first of all, remember that houses are for living in, not for speculation. That's gone now. And
the houses are for speculation again, are they?
Yes. I mean, they came up with this kind of dual housing market idea where they'll have the affordable housing and the commodity, sort of the proper market housing. And when that happened last year, we said that this is significant when they actually really start boosting the commodity aspect of the market. And now the type of language, as well as the measures they have followed through, because it is also about supply restrictions. So this is about boosting house price growth, which is a deviation from the previous path and is significant given how much household wealth is tied into housing. But then the other important part is the equity market, because that is where really we haven't had a bubble. There's a lot of comparison with Japan when it comes to China's current predicament. But remember that Japan had a housing market and an equity market bubble. Now, if China purely just reflates an equity market bubble here, in a year's time, it's going to have another problem. So we'll see. But to get the equity market going in this sort of whatever it takes, this really was when it all started with the press conference where Pang Guosheng said that they are going to maybe even double. If these stimulus, these new tools, liquidity tools were there, maybe doubling them, tripling them. This really was China's whatever it takes moment from the monetary side of things. And so the equity market upswing, which I think will be big enough to suck in that liquidity which sits on bank deposits, because there's been just such low confidence and such a surge in household savings.
Our chief Bloomberg economist, Tom Orlik, wrote a book called China, the Bubble That Never Pops. What is the danger of being basically the buyer of last resort, which is what it sounds like the PBOC has announced when it comes to the market? What's the danger? What could possibly go wrong?
I mean, to be honest, I don't agree that this is the bubble that never pops. You know, in my entire 25-year career of analyzing China, I spent half of it sort of trying to tell people, look, it's not just about the China dream. And then now the other half of, it's not just about China's Armageddon. There have been cyclical and structural significant changes in China that have impacted and have been bubble prickers. May not have been in China, but the massive bubble that ensued in the run-up to the global financial crisis had a lot to do with China itself. So the story is more complex. And I do feel that it's important to realize this very fundamental impact that China has had on global financial markets that has resulted in quite, in some bubbles and some crises. And now, if you remember, I was here, I think at the start of the year or thereabouts, and was telling you, if at the time the talk was about an equity stabilization fund, if they were to do this, they will unleash greed. They did something better, because these new liquidity tools are actually going to involve the creation of money, which is a more durable way to get the equity market going than if it was existing money in a stabilization fund being used.
So you compared it to 2008 as well, which I think is interesting, because so much of the recovery didn't just come from the States in 2009 and 10. It came from a lot of the infrastructure spending from China. How does this stimulus measure or set of stimulus measures differ from what we saw 10, 15 years ago?
Very different, because if you've seen since 2015, China has been really focused on supply side transformation reforms, whatever you want to call it, because it didn't want to engineer the type of just throwing money at the economy and investment stimulus that led to all the problems that they're now dealing with, like the housing market bubble.
Does that mean that
this time around it's consumption?
But does that mean the read through to the global economy is also different then? Or do we expect the same ripple effect?
It will be different, because you wouldn't have the same type of infrastructure built and spent that you had then, for sure. This is one aspect of what I mentioned, these supply-side restrictions. They're still absolutely determined to lower the share of real estate, if you'd like, and of construction and everything tied in as part of the economy. And also, when it comes through the consumer, it is in some ways more domestic focused rather than boosting for the rest of the world. Because a lot of what China consumes, it also produces it.
So this time around it's different. They're not going to be buying European cars. They're not going to be buying European handbags. As you get the green story...
They might still buy those, but what I mean is that a lot of what they consume, they produce domestically, and a lot of what the preferences show recently has been for the services sector.
Okay. So maybe some more travel, potentially, on...
Travel actually is one of them, yes. So in terms of international impact, travel would be. But otherwise, experiential. At the moment, that's the trend in the consumer sector.
What do you make of the equity market rally so far? Do you think it's gone too far, too fast? How is it an overreaction to what we're seeing here, or is it the right reaction to the scale of the move that we are seeing?
I think it's the right reaction.
And it's got more to come?
Has more to come.
They need it to have more to come. They can't see this thing faltering at this point, I would imagine, the Chinese authorities. Absolutely,
and that was kind of the rhetoric and the whatever it takes. And also bear in mind that they still have only sort of mooted certain stimulus that is about to come. So, for example, the fiscal part of this change is about to come.
So if this falters, there's more to come?
Well, no, there's more to come, full stop.
Anyway, but...
Full stop. But, yes, if this is to falter, there is definitely more to come. But, you know, a lot of people have wondered why they haven't supplemented this with fiscal measures and it's just still only rumors. Yeah. But the reason is that for that side of the equation, you need the NPC approval and voting, but, you know, gathering. And so that is in the works, but we have to see the precise size. It's still speculation. There is a range of measures that are going to, I think, be coming on as the localities take on this. Because one other very, very important part of the story is that in the Politburo statement, there were 3 exempts. Basically, local officials were told, go for growth, even if you make mistakes, we won't punish you, which was a big issue before that. Yeah. I mean, it's almost like the Chinese authorities read all my advice on what they should do to get this going.
They're watching you on Bloomberg Television, clearly.
Well, I mean, or other ways so you can, you know, everything I do is public. No, it is the best they could have done given the extremely difficult situation they faced, because they're still in the context. All of this is still happening in the context of the great decoupling, of the Sino-US confrontation, which also means that there is a sort of bifurcation in terms of the type of investor that can take advantage of what's going on in China.
It's a fascinating one. You use that keyword. What does faltering actually look like if we don't actually see the stimulus fully come through? And of course, as we speak, we should mention that the Chinese stock turnover surging to a record high of $340 billion. It's the highest going back to 2015. So we'll of course see how long that lasts. Diana Choyleva of Enodo Economics will end the conversation there. We thank you so much. But of course, as we keep our eye on China, Guy, you've been keeping your eye on the car makers as well, Volkswagen, Mercedes, and now Stellantis.
Stellantis, the latest out with a warning, and it looks like its stock is going to come under significant pressure. The indications are that it could be down hard this morning. That's certainly the analysis that we're seeing on the TradeGate platform this morning. We'll come back to that auto story in just a moment. Friday it was Volkswagen. This morning it is Stellantis. The European auto giants are issuing warning after warning. What do we need to watch this morning in terms of the stock story? We'll talk about the autos. We'll talk about the luxury names as well. We've just been referencing that with China too. All of that coming up. This is Bloomberg.
We're about 15 minutes and change from the opening trade. You are seeing futures pointed lower. Some of this might be a little bit of a reaction of what we're seeing in terms of the automaker space, perhaps some concerns around the fiscal policy and the monetary coming out of Europe as well. Right now, the excitement around Asia, specifically in Chinese stocks, not bleeding into the sentiment you're seeing in Europe. We'll see if that changes around the opening trade. For now, let's go to Bloomberg Executive Editor for Asia Markets, Paul Dobson, joins us this morning. A really timely conversation, in fact, given the almost 8% move that we are seeing in Chinese stocks. Paul, a pleasure to have you on the program as always. Walk us through this China story. The read-through into the rest of the region doesn't seem as large as we usually tend to see it. Why not?
Yeah, hi, good morning, Kriti. That's absolutely right. Today, while Chinese markets have continued to rally, it's been a little bit in isolation. The rest of Asia kind of holding off, even some of the China-related gauges that you might expect to see benefiting across Southeast Asia. I think part of it may be to do with the month-end and quarter-end flows, so that may be people taking profits on positions that have already performed particularly well this year. Or over this more recent time periods, but also, you know, it's just everybody is only focused really on getting their hands on whatever Chinese assets they can right now, and so you're seeing that real pile in and a bit of a FOMO trade, and I think that probably everybody is focused on that to the exclusion maybe of some of those other markets. So it'll be interesting to see whether we get that catch-up coming through. We have seen gains in commodities prices as well, metals prices, iron ore, so producers of those raw materials may also stand well to benefit in due course. But as you said, today, not seeing that same follow-through that we had last week.
Paul, who's got FOMO? Who's buying?
I like this question a lot, Guy. Thank you. Well, we certainly know that those in the mainland do. They're piling in willy-nilly. It's been crashing the trading systems on Friday, crashing brokerage accounts over the weekend as they try to register new accounts. As reports of people pulling money out of their savings accounts in order to put more into the stock market as well. So people on the mainland that have been in this gloomy picture of equities for so long, then, the market was very short positioned as well and very underweight China. Just a couple of weeks ago, we saw that in the Bank of America survey. So there's a lot of people that are having to recalibrate those positions to close out the short positions. Or think about this, if you're a fund manager and you've been running a very underweight China position, if you look at the emerging market gauges, for example, an ex-China gauge had been outperforming until just recently. Now, the one that includes China has pinged back above it. So you need to think about whether you want to close out that position. Not everybody does. We've heard from the likes of Lombard Odier telling us that they determined to stay away from China. They don't think that it's good to come back in again. So there is some parts of the market that are more resistant. But on the whole, lots of FOMO all over the place.
Nothing to get Paul Dobson excited than a little market plumbing. Paul, let's talk about the market plumbing around Japan as well. You're seeing a pretty big drop there. How long does that last?
Yeah, really good question. I think the Japanese market developments are more about how the market had been positioned on Friday, where we had that quirk that the stock market closed after the vote of the new before the vote of the new leader had all been counted, whereas the yen had time to react. The yen went booming stronger on the fact that this guy is more likely to see the BOJ push for more hikes. So stock markets only had time to react today. Now we've got that cold pullback. Probably everything will settle down.
All right, Bloomberg Executive Editor for Asia Markets, Paul Dobson, we thank you so much for giving us a little bit of an explanation of what's happening in terms of the risk sentiment to the downside in Japan and the rally we're seeing in China. Let's go from the macro to the micro and get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So we're going to follow on from what Paul was discussing there. And we're going to look at the luxury and miners today because we could yet see more action in this space this morning. So firstly, bear in mind that the luxury goods space had its best year since at least 2012, its best week since at least 2012 last week, with a 14% gain for that index. And the stock's basic resources index, best week in around 3 years. So all of those sectors getting a big boost. And if we look under the hood very slightly at some of the biggest movers in terms of the single stocks, LVMH up 18%, the biggest gain since 2001 for that stock. Richemont, Anglo and Anto in the mining space, all of those stocks. Potentially we're going to see more price action there with that big surge in iron ore and also the Chinese market up around 7% as Paul was going through a moment ago. But in terms of stocks that we could potentially see weakness in, we are looking at autos once again because the profit warnings just keep coming from this sector. Today we've got warnings out from Stellantis and Aston Martin, and on Friday we had one as well that came out from Volkswagen. Now, if we look at just this month alone, of course, we're on the last day of the month, but we've already seen warnings coming from Volvo, BMW, Mercedes, and as I say, the latest ones coming from the two down the bottom here. Now, the interesting thing for me is with the recent profits warnings that we've seen, we haven't actually seen too much of a movement in the auto space because analysts kind of saying a lot of that is priced into the market. However, this morning we are seeing some weakness in the share price of Stellantis over on the Tradegate exchange. In particular, that one is down around 6% on the German market. So potentially we could see some weakness. But as I say, I wanted to just point out that if we look at the chart, actually it kind of suggests a lot of this negativity is priced in. It is all due to demand, all due to China and that kind of thing as well. Now we've got RightMove as well. Now I've just been catching up on my phone as I was standing here because we've just literally got a statement from RightMove saying they've rejected the latest bid from REA Group. Now, bear in mind, on Friday, analysts at Citi had this quote out in a note. They said, RightMove's share price continues to suggest the market does not expect this deal to go through. So they were really clear because when we take a look at the stock, we can see it's currently trading at around £1 below where the REA bid was coming in. So it's at around 775. We can see it closed at around 670 on Friday. So basically, the market said this deal isn't good enough to get it over the line. And that's pretty much what we've just heard from RightMove. They say that the bid materially undervalues the company and they've unanimously rejected it. That's a statement from the board that's just come in a few moments ago. So we'll keep an eye on RightMove. The thing to note, though, REA did have until 5 p.m. today to make a firm bid for the company, but it looks like that deadline is just going to pass, and this deal, as it stands, is not going to go ahead. But keep an eye on RightMove shares in London today.
Joe, great stuff. Thank you very much indeed. Joe Easton walking us through some of the single stock stories, sector stories, actually, that we need to be watching as well. How do you play China? I think is a question that a lot of portfolio managers are trying to figure out right now. Do you play it directly? Do you get involved in that market and all that is going on there? Or do you play it through the commodity space? Do you play it through the luxury names here in Europe? Do you play it through the miners? Are the autos going to get a boost off this? Yes, we're getting some warnings coming through from names like Volkswagen and Stellantis. But if the Chinese consumer gets back into gear, does the European auto sector get back into gear? Is this good news for Apple? The permutations go on and on and on.
Well, Diana Choyleva also made the point that we haven't even factored the U.S. election into all of this, that hasn't even really played a role just yet. The other piece I'll add to this in terms of the underperformance is, yes, you have to factor in the China story. I'm still a little bit obsessed about this report over the weekend out of France, talking about what a taxation policy might actually look like. You aren't seeing, of course, the corporates respond very well. Does that lead to some sort of underperformance in French stocks on top of the luxury hit you might get on
Well, let me throw you another piece, into that story. What happens if the French government falls apart? There's a possibility. There's a serious possibility that they are going to struggle to keep this government on track. We saw the big hit coming through to French equities as a result of that. Is that something you see more broadly? But let me take you back to the China story. If you're going to buy the European luxury sector, that's the French story.
Yeah.
Does the CAC 40 get affected? Is the CAC 40 more affected by what is happening globally than domestically? Does the taxation story get eclipsed by the fact that we're going to see Chinese consumers once again travelling, spending? Is that a bigger piece of the puzzle than maybe what is happening with the taxation story domestically?
In the equity story, absolutely. In the bond market, perhaps a little bit different, where perhaps the focus is more on the budget, more on the taxation story. So we'll see how that all shakes out. Coming up, it is, of course, the opening trade. Futures are pointing lower. A real divergence from some of the green on the screen you're seeing in Asia. We're going to walk you through the opening trade next. This is Bloomberg.
Monday the 30th, couple of minutes to go until the start of equity trading. Let's talk about where we are here in Europe and where we can expect to go as the market gets underway. This is the story from Friday. So the equities in Europe rally into the close. US then fades. That's the blue line there. That may be why we're seeing futures a little softer this morning, because there's so many forces at play for the European equity market this morning. You've got this story, the fade of the US Friday. You've got the China story to fold in as well, what's happening with the miners. You've got the auto story we need to be thinking about, the luxury names. That's a story as well that we need to fold into this narrative. But at the moment, it looks like futures are a little softer, which feels like maybe the arithmetic from Friday out of the US session maybe is a little bit more dominant. Kriti, what single stocks are we watching? What sectors are we paying attention to this Monday morning?
Well, I'm gonna channel my guy Johnson here. This is where you start to see a little bit of mixed messaging, because we are talking about the China read-through. You're going to see it likely in luxury, in automakers, arguably in the chip sector as well. Of course, ASML is going to be a focus, not to mention the mining stocks. But then you have the flip side of that, which is, do you see positivity from the China story, the stimulus story that we might see in mining stocks, or do you see perhaps more pain into the luxury story because the stimulus is responding to weaker Chinese data? Not to mention kind of doubling up on the auto story as well. Pain in Volkswagen, pain in Stellantis. That's what we're expecting this morning, as both start to see a compression in their operating margin as well. And then some deal news we've got our eye on, as Joe Easton was mentioning earlier. RightMove rejecting the proposal from REA, Rupert Murdoch's company. Of course, this is a big deal when it comes to that deal. Do we start to see more offers, a higher offer? We'll see all that shake out at the market open, Guy.
So much to think about this week. We're building up to payrolls towards the end of the week as well. We need to factor that into our thinking too. But here we go. The Monday morning opening trade. What are we going to see? China's absolutely on a tear at the moment. Europe looking like it's going to be having a much more cautious start this Monday morning. And there you go. The FTSE 100 out of the gate. Little bit of negativity there. How are the miners going to trade? What is that story going to look like in London this morning? How are they going to be factoring what is what's happening with the iron ore price. Stock 600 is down by 0.2%. What's happening in the luxury space right now? What's happening for the auto space as well? We need to be thinking about all of that. Could take a while for the CAC Iran to get going this morning. Certainly could take a while for the DAX to get going this morning. The reason for that, we're watching what is happening with the luxury names. We're watching what is happening with the auto space very, very carefully. The IBEX is down by 0.3%. This feels like a very different picture to the one we saw in China. Is China isolated, or Kriti, is there a spill-out effect into the wider market here in Europe?
Well, right off the bat, there is a little bit of a spill out, although I wouldn't say it's as strong as perhaps we had expected. We are seeing broad red on the screen when you look at a sector basis, but you do see, as expected, that basic resources sector outperform. One of the small boxes on your screen right now that is really showing the outperformance seeing in the likes of Rio, Glencore, Anglo-American, among others, mining stocks as well. But alongside it is some of the commodity stocks. I thought this was interesting, given we're not seeing a big move in oil this morning yet. Shell, BP are going to be some of your biggest index contributors on the FTSE 100. Yet, net, you look at the banking stocks, you look at the tech stocks, Guy, they are dragging the entire index down. Go ahead.
Sorry, the oil stocks were down quite heavily at the back end of last week, which was interesting. So maybe just a little bit of a bounce back this morning coming through from BP, as you say. Feels like a commodity morning rather than a luxury morning, which I think is interesting.
We're still waiting for the pricing to shake out.
Yeah, I think we'll wait and see maybe before we get a little bit more out of the CAC Iran. Let's see what we've got on the CAC Iran this morning. Let me just bring up the details of what is happening there, just to give you an idea of what big names like LVMH are doing. The CAC is also dominated by Total, which is up very strongly this morning. At the moment, it's interesting, we actually have LVMH softer. So LVMH is down by 0.4% on my screen right now after a big move Friday. So maybe some profit taking coming through there.
It absolutely could be. But remember, again, we're talking about a response to why is this stimulus in China even necessary to begin with, especially when so much of it was being targeted towards the infrastructure, towards the commodity sector, which is probably why you're seeing the mining story benefit far more than the luxury spaces as well. Let's go back to the car makers, though, because that's the one we're still waiting for the pricing to shake out. The DAX is not open yet, but we are waiting for those initial moves. Perhaps that's where we see the bigger hit when it comes to the sectors that we're monitoring this morning.
I've got Volkswagen down by 1.32%. So in many ways, that feels like a relatively minor move to the downside. I'm not seeing yet a price on some of the other automakers. But, BMW's down by 0.9%. Volkswagen a little bit softer than that. But you're not maybe seeing the big move that maybe we would have anticipated.
Yeah.
I slightly wonder whether or not actually the China story feeds through into some of the auto names. If you are going to see consumption coming through, because this is so based on the problems that some of these companies are seeing in China, does that get better from here? Is this the low point? Maybe the market's making that assessment this morning. Some of the chemical stocks, though, are softer in Germany, BASF in particular, after some moves last week, down by 1.1%.
You mentioned Volkswagen. You mentioned Stellantis as well. On TradeGate, it was down about 6.5% after that guidance cut. It's halted this morning, and so is Porsche, by the way, as well, also down 2%. So perhaps waiting some more volatility as we start to get more of this pricing really hit some of the wire. Let's get a little bit more perspective here, especially when it comes around the European equities picture. Joining us now this morning, Marcus Popp, co-head of European equities over at DWS, joins us from Frankfurt. Marcus, you picked quite a good day to join us because we're trying to figure out what kind of cross currents we should take from the China story, from the domestic automaker story in Germany, not to mention some of the budgetary story in France as well. Marcus, what is top of mind for you? What drives European equities?
Well, good morning. Thanks for having me. Well, I think what we're seeing now is that the positioning and the cyclical end of the market has been rather weak. I think people were almost giving up on their hope for a China recovery, and therefore the moves have been quite violent recently. But I think I would caution that we imminently see an uptick in earnings expectations just because of what we're seeing in China. I think we have to wait for that to happen for some time.
Does that necessarily create kind of a buy the dip opportunity for Europe, or is this still a story where Europe underperforms perhaps the consumer resilience you're seeing in the States and the kind of government-backed stimulus that you're seeing in China? Is Europe the underperformer, or is Europe the catch-up trade?
Well, I think it's clearly the catch-up trade still, because the discount versus the US market is still quite significant. But in the end, it will come down to earnings expectations, earnings momentum for the European market to have a sustained move upwards. And I think for better earnings performance, to see that really happening, I think we have to wait, actually. I think right now we see an improvement in sentiment, which is driven by the more stringent action that we see in China. And that's good news for sure for the European equity market. But I would caution against expecting that we will see, like in 3 or 4 weeks, companies saying, oh, actually, China is picking up. I don't expect that. I think it will be a slow burn. It's rather what we're seeing in China is it's getting less bad. But for a sustained move upwards, I think we have to see actually things improving on the ground and therefore earnings expectations to be moved upwards. And I think it's a bit too early for that.
Marcus, do you buy European equities if the ECB cuts rates in October?
Well, being responsible for European equities, I do buy them, of course. No, but kidding aside, yes, I think it's, in a way, central banks are easing in Europe. They are easing in the US, which is a good sign for assets in general, for sure. And if we see, in addition to easing, an improvement in economic sentiment, if we actually see numbers on the ground improving, then I think we are up for actually decent returns also going into next year. All I'm saying is I think we have to be mindful that it will be a bumpy ride and there will be opportunities, especially after this move we've seen so far, to add on European equities if we get a sustained uptick in earnings expectation. And why I'm saying it's not right now is... Sorry.
Yeah. Do you think the headwinds for European equities are getting greater or are they diminishing?
No, they're diminishing for sure. They're diminishing for sure. Because I think Europe is bottoming out, but it's not really improving. It's just bottoming out. At least that's what we're hearing from the company side. We've seen leading indicators being quite weak for some time. I mean, just imagine the IFO is down 4 years now. The IFO peaked 4 years ago. So it's quite a long way to go. Or we've seen quite a long way going down. And I think it's stabilizing now. And therefore, what's happening in China, it's good news per se. It's adding to the sentiment for Europe. But we have to be mindful. There's a structural change in the competitive landscape out of China. On the automotive side, we've seen that also on the industrial side. Chinese companies have become much more competitive. And therefore, it's cyclically helping. But the structural headwinds for Europe and also for the export-driven model for Germany, it's not going away.
Well, Marcus, you mentioned the EFO data as well, and one of the key pieces of that was this lack of pricing ability that you were seeing, not just in Germany, but it's something you're seeing across Europe as well. I'm curious about your views on the future of margin, of operating margin specifically. We know it's driving Volkswagen and Stellantis down in the early trade this morning. What does margin pressure look like in the next 12 months for European equities?
I think it will be there. I would not expect margins to improve. I mean, it remains to be seen, but a lot of deflation and price competition is coming out of China. China has been exporting deflation. And unfortunately, even with the stimulus, that's not going away. We've seen companies in general talking about severe price pressure in the Chinese market. And of course, that slips through the world, right? Because many products that are sold in China can be sold everywhere else. Therefore, I think there will be margin pressure. But we have to keep in mind we're coming from record high margins. So there's some breathing room, I would say, for companies to remain highly profitable. But I would not expect to see another uptick in margins over the next 12 months.
Marcus, nice to catch up. Thanks for joining us this morning. Really appreciate it. Marcus Poppe, co-head of European equities at DWS. Stellantis getting absolutely battered right now, down very hard. It's interesting that Volkswagen isn't. Let's take a quick look at the core six, just figure out what is happening across the picture in terms of the major market stories that we often keep an eye on. Novo Nordisk still struggling a little bit, finding it's hard to make headway. LVMH has popped now into positive territory. Ferrari, ASML softer, Schneider softer. A little bit of a defensive tilt maybe to the market. Nestle up a little bit. But there's other single stocks we need to be watching. The car sector absolutely front and centre this morning. Joe Easton's got it covered.
As you say, Guy, really the only place to start is the auto space, getting hit very, very hard on these warnings that we've seen out of a number of companies since the close of trading on Friday. So we have Stellantis, Volkswagen and now Aston Martin as well around an hour ago, adding to the pain in terms of the profit warnings that we've seen from those companies, this sector. Now, I did expect potentially some of this might have been priced in, but the move in Stellantis really catching the eye over in Italy, down 8%. Now, bear in mind, this is a sector that has underperformed a lot already. A lot of them are citing Chinese demand as well. Also, the strikes over in the US, the kind of things we've already heard of, but really catching the eye in terms of those moves low. And Aston Martin today saying that they're going to reduce the number of Aston Martins being produced by around 1,000 units over the year ahead due to some supply issues. So that is adding to that decline there. Then we'll check in on RightMove. Now, this was the worst performing stock actually across the stock 600 before we got the Stellantis opening trade, down 4%, rejecting the latest bid from REA. Now, remember, this is the Australian company that's made 4 attempts to buy the firm. The bidding deadline for a firm offer is at 5 p.m. today, but it looks like that's just going to fall away, and this is just not going to happen. RightMove are rejecting REA, and that is pricing that into that stock. In terms of another UK one, quickly, Boohoo. This one was reported in UK press that it's looking to potentially break itself up amid activist and investor pressure. That was according to a Times report at the weekend. So we're seeing a gain in that one, 5% move higher. Pretty decent for the clothing retailer, facing competition concerns, of course. And then here's the Chinese impact. So mainly we're looking at the miners and oil. The luxury stocks actually not doing too much today. Potentially all of that was priced in, given those massive jumps in LVMH carrying all those firms. But we are seeing Rio, Anglo and the oil majors in London, BP and Shell, getting a boost. And then speaking of a boost, we've got a big one in terms of rating changes. Bank of America recommending buying Ocado. Actually, we've got the different title to the price, but it doesn't matter. We're going to go with it anyway. Trust me, Bank of America's upgraded Ocado to buy, and also Puig over in Spain, which is the maker of all these brands that we love. Jean-Paul Gaultier perfume, Charlotte Tilbury, all of that recently listed in Spain. Jefferies is upgrading that one. So Ocado's a buy, and also Puig over in Spain. Both of those stocks gaining. A couple of morning calls for you this morning.
Some green on the screen, nevertheless. Joe Easton from our equities team, we thank you so much. We're going to keep an eye on those, of course, as we continue the trade across Europe. Coming up on the program, we're going to dive a little bit into the geopolitics, why the far right in Austria is unlikely to play any role in the new government, despite winning an historic election victory. We're going to dive into the details next. Stick with us. This is Bloomberg. Welcome back to the opening trader. At 15 minutes into today's session, you are starting to see a little bit of a turnaround in just the first 15 minutes of trade, pairing some of those early losses when you look at the broader European indexes. However, underperformance in France. You are seeing some pain in the luxury stocks. You're, of course, seeing Stellantis take a big chunk of that as well. We're going to dive into the details of that throughout the rest of the show. But for now, let's go into one of the major stories over the weekend. Austria's far-right Freedom Party won the most votes in a general election and vowed to start coalition talks. But traditional political powers are pledging to block the party from forming a government. Let's get the details of Bloomberg's Jonathan Tyrone joining us out of Vienna. Jonathan, a pleasure to have you on the program. Walk us through this Austrian story. The Freedom Party is being frozen out of coalition talks to form a new government. What's the state of play here?
Well, they won 29% of the vote yesterday. That's the highest total they've won in any election. The trouble is that their leader, Herbert Kickl, won the most votes, but he's also by far the most divisive politician in Austria. The president came out after the election and said very clearly, you need to have 50% of the parliament in order to form a government. The moderate conservative People's Party and the Social Democrats have both ruled out any coalition with the Freedom Party with Herbert Kickl as its leader. And so that throws it back into what will be an extended period of negotiation between the historical powers. Austria has been run most of the time in the post-war period by a combination of the People's Party and Social Democrats.
In terms of the issues that have driven this election, what does it tell us about what comes next? This populist surge that we're seeing on the right, how sustainable is it? Is it going to go from strength to strength, or is this as good as it gets?
Well, inflation and immigration are the two driving factors that were propelling the Freedom Party into first place. The feeling is that the Freedom Party may be content in opposition to continue trying to build on that 29% that they won. Whether they can ever come to a place where they could win a majority, that's still far off. And so, it's going to be a question of political maturity, frankly, whether they can moderate their language to a point where they can actually enter government with another coalition partner, or now the other parties are going to be on the clock to actually solve some of the problems and address some of the issues that have been of concern to Austrians over the last several years.
Jonathan, thanks for the update. Greatly appreciate it. Jonathan Tyrone joining us out of Vienna on the election results. Let's turn attention to what is happening in Croatia. The Prime Minister there has weighed in on the US presidential election, calling for order after the 2020 vote, quote, weakened American democracy. Andrej Plenković spoke to Bloomberg's Vonnie Quinn.
It is up to the American people to decide. What is important that the America walks out of the elections in November by strengthening American democracy, because everybody looks up at what happens in the United States. And last time we felt that the United States democracy was weakened rather than strengthened. So we very much expect an orderly and democratic process and smooth transition, whatever the transition will be, upon the decision of the American people.
Domestically, for you, you were in your third term. It was a little bit more of a difficult election this time around. In spite of the fact that you brought Croatia into the EU, also the Euro area, so it's now a Euro user, and the Schengen zone, so visa-free travel all around Europe. Were you a little disappointed that all those successes didn't lead to an outright victory, in the sense that you've had to make a coalition with the far-right homeland movement?
Well, we always had a coalition both in first, the second and the third mandate, but what we did is that we converged on the main points of our government program, and the government program is predominantly the program of my party, that I'm the president of, Croatian Democratic Union. I think that the Croatian citizens gave us confidence for the third time. Maybe it could have been one mandate more or less, but when I look from a, let's say, a larger perspective, the fact that we have regained confidence in such global and regional, meaning European, but also national circumstances, with consequences of COVID, with two devastating earthquakes, with the ramifications of the energy crisis due to the Russian aggression against Ukraine, inflationary pressures, we have, despite that, managed to join the Eurozone, the Schengen area, get rid of visas with the United States, enter the global entry program, European Stability Mechanism, on the verge of joining the OECD, and most of all, increase GDP. In last 3 years, the average GDP growth in Croatia was 7.6%, only 2 EU member states having a larger, or I would say higher percentage. And also, of course, which is very important for us, since we are at Bloomberg for the first time in our history, recently 2 out of 3 credit agencies put us into the A investment credit rating, which I think is a recognition of the reform process, good absorption of the EU funds investments, and I think that Croatia is on the right path, especially being reflected on the salaries and pensions of our citizens.
Well, you are referring to the S&P and Fitch upgrades
Exactly.
to A-, the highest in your history, as you've said. Are you planning to use those upgrades in the primary markets, or are your needs already met?
Our needs in terms of refinancing, that's are continually, I would say, refreshed. But what is happening now, we are, of course, having the possibility to have lower interest rates. There are immediate effects on our banking sector, in the sector of loans for our citizens, and the entire economic perception of Croatia having been fully with our 2 feet in the heart of the European Union, with a very good reputational assessment by the credit rating agencies, is a boost for Croatian economy. Most of the business sector that I've been in touch with are really excited with this development, and it's helping them to work on their productivity, it's helping them to work on their exports and contribute to the Croatia's economy.
Croatian Prime Minister speaking to Bloomberg's Vonnie Quinn. Let's turn our attention back to what is happening in the markets right now. One area of attention certainly is what is happening in the auto space. European car makers under significant pressure. It's taken a while for Volkswagen to get into gear. Looks like that gear is reverse. Issuing a profit warning, a second profit warning in 3 months Friday. We've now seen a similar story coming out from Stellantis this morning as well. It is down by nearly 10%, that stock. Let's get the details. Let's figure out what is happening here. Let's go to Berlin. Ollie Crook standing by for us there. Ollie, is there a line that I can draw between what we're hearing from Stellantis and Volkswagen?
Yeah, and you can draw that line even further across the auto industry to Mercedes, to BMW, and you can't even fit it onto the graphic. Aston Martin also coming out with a profit warning today. And basically, while you have sort of idiosyncratic issues at Volkswagen, they have some additional costs to do with closing a factory in Belgium. Stellantis is having some issues over in the United States with their Jeep and Dodge sales, so they're sort of spending a lot of money to try to fix that. Of course, BMW has got that recall that is sort of across the board. But across all of these automakers, there's one thing that unites them, Guy, and that is the weak outlook for demand globally, but specifically within China. And if you look at how that's sort of affecting the stocks this morning, I mean, it's fairly remarkable to see the shares sell off quite this much. 5% over at Volkswagen, Stellantis 10%, and Aston Martin 14%. And when you put that into sort of the context for the broader year, why I'm so surprised that there's such an aggressive sell-off today is because these stocks have already been crushed year to date across the board. So to tell you that even though they have sort of all this bad news priced into these markets, into these stocks, that you're seeing further and further aggressive selling with every sort of profit warning here, it's, I think, significant. Again, year to date, 15% on Volkswagen, Mercedes 6, BMW 20, and Stellantis down almost 40% this year.
Yeah, Ollie, Guy and I were talking about that. The steepness of it, the margin of the move is what's really worrying here. What's the plan to turn it all around? What's the antidote?
So listen, with this sort of sluggish outlook on sales, the thing that you need to look forward to if you're not going to have pricing power or sales power is going to be cutting costs and looking at margins. And so cost cutting is going to be completely in focus, as we know as it is for Volkswagen. Right here what we've got is a chart of the net income per employee over at Volkswagen. And you can see that it is far beneath the other competitors, whether it's GM, Ford, or Toyota, basically at least $20,000 per employee less across the board. So this is going to be one of the big focuses for Volkswagen, and this is why they are beginning to talk about job cuts and closing factories. This has been a big struggle for Volkswagen because in order for them to pull that lever, unlike, say, Tesla that has non-union labor, it is very difficult for them to enter into those negotiations. The good news for Volkswagen is that they have not really, they're sort of early on this journey of cost cuts. Stellantis, on the other hand, has been cutting costs to the bone for a very, very long time, so they may have a little bit less room to do that. But if you look at just the number of employees that Volkswagen have, it's an absolutely massive company, almost 700,000 employees. 300,000 of those are in Germany. And when you look at sort of labor costs of Germany versus other parts, the sort of average auto worker in Germany makes about 62 euros an hour. In Hungary, that's about 16 euros an hour. So that gives you sort of a picture here. So we're definitely going to see some of these cuts coming. The question is, how are they going to be able to negotiate with these unions? And we're still in the very early stages of that.
Bloomberg's Oliver Crook giving us the lay of the land of the Volkswagen and the Stellantis story. We thank you so much. Guy, this is fascinating that he ended on that labor story because it's one that we're seeing over in the States as well. We're seeing in other parts of the world. I believe we have port strikes along the eastern seaboard as well. How does that show up in already increasingly vocal labor movement in the States?
Are we going to start to see, though, European labour unions having to shift from looking for bigger pay rises to looking for more job security?
Yeah.
And I think that's going to be an interesting turn to see whether or not that has a meaningful impact. In the States, we're watching what is happening at the ports, we're watching what is happening at Boeing, two big areas of the US economy that we could be in for a prolonged period, potentially, and a substantial impact. So we're going to see that news. We're going to watch that very, very carefully. What are we going to be talking about next? Paul Machetele, the South African Deputy President, is going to be joining us. He's in the country to talk to investors. He's going to join us here in London. That conversation next. This is Bloomberg. "30 minutes into the equity market session here in Europe, and as you can see, we do have some weakness, though we are starting to firm a little bit. There's some key areas of attention this morning. The auto sector firmly under pressure. The reason for that, warnings from Stellantis, from Volkswagen, and also from Aston Martin that we need to be pricing in. The mining stocks, though, doing a little bit better. That's the China read across. That's what we're seeing in the markets this morning. Let's talk about another market. Let's talk about South Africa. South African stocks are having their strongest third quarter in 11 years, amid optimism that falling interest rates and a market-friendly broad coalition, a unity government, will boost growth. The so-called Government of National Unity, installed after May's election, has spurred hopes of fixes for the energy and transportation problems that have hit the South African economy so hard. Remember, South Africa, the most industrial economy in Africa. Let's talk about what comes next and what is happening within the South African economy. South Africa's Deputy President, Paul Mashtele, joins us around the table. Not sure if the scarf's just to kind of comment on South Africa or on London's weather this morning, which seems to be changing, and maybe it's a required piece of clothing. But welcome to the programme. Thanks for joining us. Look, you're here to talk to investors. Yeah. Investor sentiment has improved towards South Africa. The unity government seems to have been a major turning point. Yeah. Cyril Ramaphosa's decision to do that seems to have really changed the view of the economy. Yeah. What now needs to happen to keep this on track, to keep sentiment buoyant? What message are you bringing to investors here in London?
Well, firstly, let me greet you, Kai and Kriti, and thank you for welcoming me this morning. Well, the first thing I want to say is that the government of national unity is working. It's well and good. In fact, I'm here in the UK with a number of ministers, and our message is very clear. We want to say to the investors here, come to South Africa. We are open for business. We want you to come and invest in various sectors of our economy. We decided as the GNU, as we call it, that we shouldn't spend time quarreling about this or that. Let's focus. And the important thing for us is growing the economy and inclusive growth, create jobs, and deal with the things that affect people the most, like cost of living. Yep. Those are the things that we are focusing on, and we believe we are on the right course.
The economy has gone from growing at kind of 0.2, i.e. flat, to 2%, which is certainly a big improvement. Yeah. We've got a budget coming up. What kind of numbers do you think are achievable? Do you have the fiscal space in that budget to be able to solidify this growth and to further enhance it, to deal with some of the issues that you've just been referencing? What can we see in that budget? What should we expect in that budget? What should investors be looking for in that budget?
Well, the budget is very tight. As you know, immediately after COVID, we took a dive. But the good news is that we are now on a positive upturn. We think that by next year, we could be growing at about 1.5% of GDP. That's good news. But we don't think we'll have all the money we need to do all the things we need. So we are prioritizing. We got a lot of ministers and we said, look, maybe cut here, but put the most important things first, especially those things that will help us grow the economy, create jobs. We are also looking at beneficiating our minerals. In the past, we're like an extractive economy. We take our minerals out. Now we are saying to investors, come in South Africa, let's produce finished goods here. Let's ensure that we can train people, because there are a lot of people who need skills to produce new goods. So that's our approach now. We think we shouldn't continue this approach of exporting our minerals. So slowly, we would now focus on local beneficiation.
You mentioned the cost of living, and of course that being a key focus for the government. You also mentioned how much pressure the budget is facing. Which basic resources, basic services that the government provides could be hit the hardest in your view?
Well, we have been trying to provide housing to poor people. We think that's one area where we're going to have a lot of challenge. We are continuing, but probably not at the rate in which we would have wanted. But there are other methods that we use. Instead of building houses for poor people, we give them land that is service and assist them to build their own houses. Yeah. At least we still are able to provide grants to the elderly, children who don't have parents or fathers. Right. So those grants are protected as we speak, just to cushion the poor. but we are shifting more resources to economic activity. We want to grow the economy, particularly through infrastructure investments, build new roads, dams, new railway lines, because we want to ensure that those areas where we need to export goods through the coast, we have the rail lines working. So those are the things that we are focusing on. We are investing now a lot in infrastructure.
Well, it feels like that infrastructure investment, at least for our last couple of months, have shown up in the electricity story. We have had no power cuts in the last couple of months in South Africa, which, of course, is a crucial piece, perhaps at the expense of water shortages, though. And I'm curious how you and your government are looking to address the issues around water infrastructure.
In fact, a few months ago, the president said to me, look, we seem to be winning with this load shedding problem, but let's focus on water now. So as we speak, there is a task team, which the president has asked me to convene and chair, which is looking at water. I've been traveling around the country now looking at that matter to ensure we don't get to a crisis. We are happy that with load shedding, we're now almost 200 days with lights on, and we think that we will not go back. We will keep the lights on because we're fixing the power stations. We are actually inviting the private sector to come and invest in energy, in renewables. And once they do so, I don't think we'll have a challenge of going back to the dark days where we have to have load shedding. So pretty confident, but we're now dealing with the issue of water. We do get a lot of our water from Lesotho, which is one of our neighboring countries. Yeah. But we also have our own dams. Most of them are full. Challenge is reticulation in some communities. I visited Limpopo just 2 weeks ago, where people were complaining the dam is full, but we're not getting water. So we're sorting out that challenge of reticulation.
Is there the money to do that? Do you have the necessary resources, the necessary finances to resolve the water crisis?
In fact, in some of the provinces, yes. Right. In Limpopo, when I asked them, but why don't you reticulate? They said, look, we can't fix this problem in 2 years. I said, no, we don't have 2 years.
Yep.
I want you to sort it now. They said, if you give us more money. So I said to them, we will.
Okay, but and the money's there, yeah?
Yeah, we've got some money.
China looks like it's wanting to kick its economy into a higher gear. Yeah. That's what we're talking about this morning on this programme. It's impacting Europe. What impact does it have on South Africa? You've indicated that you are in the, as we all know, in the resource materials sector. Yeah. China's a big user of all of those things. What impact do you think you will see, could you see on the global markets as a result of a stronger Chinese economy?
Well, China has taken a lot of interest in South Africa. In fact, as you may be aware, the president was in China recently with a lot of our ministers to talk about trade, etc. Chinese companies are also investing a lot in South Africa. You are quite right. We export a lot of our raw materials to China, and we have said to them, we're going to slow that down because we want beneficiation. Of course, you can't do it overnight, but long term, we are saying to them, come and do the finished products here in South Africa. So that's a discussion we are having with them, and they are agreeable.
Let's talk about the other news over the weekend. Of course, China was one piece of it. The other is what's going on in the Middle East. What is South Africa's view on Israel's bombing campaign against Hezbollah in Lebanon?
Well, as you know, we went to the ICJ as South Africa, and we continue to call for ceasefire because we think it's important that the Palestinians must be given an opportunity to have their own independent state, living side by side with Israel. So we're going to continue on that trajectory of ensuring that there is peace. We can't accept the killing of innocent people, women and children. And so we're working with other countries. We think it's an important moral stand that we should all take to call for peace and call for ceasefire and make sure that things can be resolved through negotiations rather than war and violence and so on. So yeah, our standpoint is very clear on the issue of Palestine. We want a free Palestine, and that can be achieved.
Will you be adding the Hezbollah development to the case in the ICJ?
Well, we have not finalized our new approach there, but we are likely to say, let there be peace everywhere. We don't want now an extension of war into other areas. So even if we don't add these areas, but I think our message is clear. Stop the war. Let's negotiate. Let there be peace. Let people live side by side and build their lives.
Certainly something we're going to be keeping on. A pleasure to have you here in studio. South Africa's Deputy President, Paul Mashatile, we thank you so much. Coming up, we're going to continue that conversation on the rising tensions in the Middle East after the killing of Hezbollah leader Hassan Nasrallah. More on that next. This is Bloomberg.
As long as Hezbollah chooses the path of war, Israel has no choice, and Israel has every right to remove this threat and return our citizens to their homes safely. And that's exactly what we're doing.
This madness cannot continue. We condemn this aggression, and we demand that it stops immediately.
We must not, we cannot have a war in Lebanon. Israel cannot, without consequence, just expand its operations to Lebanon.
Now is the time for the parties to finalize its terms, bring the hostages home, and secure security for Israel and Gaza free of Hamas' grip.
We condemn Israeli crimes against humanity. It is imperative that the international community should immediately stop the violence and bring about a permanent ceasefire in Gaza.
World leaders speaking at the UN General Assembly last week. Let's focus on those latest developments in the Middle East, where Israeli strikes have hit Houthi targets in Yemen following the killing of Hezbollah leader Hassan Nasrallah. Let's get more on the story with Bloomberg's Horizons Middle East and Africa anchor, Jumana Bersechi, watching the story very closely. Jumana, give us a state of play here in terms of what's going on in the region.
Yeah, Kriti. Well, I think the first thing worth noting is that the operation to take out Hassan Nasrallah by Israel was called Operation New Order. And I think that in itself underscores just how much of an influence Hassan Nasrallah has had, not only over Lebanon, but over the region over the last 4 decades. Now, he's sat at the helm of Hezbollah since 1992. And over the course of him leading that group, he has turned it from a militia, mostly domiciled in southern Lebanon, into an extremely powerful military, political, and even social force that wields a lot of influence in internal Lebanese politics. He is a very polarizing figure, and his detractors in Lebanon blame him for having created this state within a state and for putting Lebanon within this Iran orbit. And so the question from here onwards is, what happens to Hezbollah? Because they've lost their leader now. They've lost several layers of command. They've lost many of their operatives who were injured or seriously, critically injured in those explosions that happened a week ago. And so from here onwards, will they manage to regroup? And to what extent is Iran willing to step in to help Hezbollah with those regrouping efforts? So as long as those questions remain unanswered, what we're seeing on the other side is the airstrikes from Israel into Lebanon and into key targets in Lebanon have continued over the course of the weekend. The death toll just from this weekend alone is 100. We're hearing this morning that the Hamas political chief in Lebanon was also targeted in an airstrike overnight. There was another airstrike in central Beirut around the Kola area, which took out another 4 people, 3 of them from a Palestinian resistance group. And so again, what you're seeing is an intensification of airstrikes over the weekend. No sign of either side relenting yet.
Jumana, is there surprise in the region that we are seeing such a muted response coming from Tehran at this point?
I think there is a bit of a surprise. And what people in the region are saying is that Iran have essentially washed their hands of Hezbollah. But deeper analysis would show that even within Iran, there are lots of debates going on as to how they should respond to this. You've got, on one hand, the more reformist president. You've got President Pezeshkian. Remember, he addressed the UN General Assembly last week, and he was more conciliatory in tone. He suggested opening up dialogue with the West, the potential watering down of some of the sanctions that have crippled the Iranian economy, negotiations potentially about their nuclear ambition. So that's the language, official language, that's coming through from the president. But of course, you have to remember that IRGC are still very much the hardliner group that dominate the Iranian regime here, and they have been calling for a harsher retribution. Now, if you rewind back to April, that was the first time that Iran attempted some sort of a direct retaliation against Israel. All of their efforts were intercepted. And so the question for Iran is, do they risk getting dragged into a broader conflict, one that would lead to a regional and bigger war that could set them deeply back in case Israel starts targeting directly some of the Iranian infrastructure? Or do they take a hands-off approach and bide their time, give Hezbollah the opportunity to regroup and then rethink their strategy later on? And that seems to be the big question at the moment. But for many, at least within Lebanon, there is a sense that for all of these years, Hezbollah was beholden to Iran, and when Hezbollah needed Iran, Iran didn't show up for them.
Jumana, lastly, how does this affect ceasefire negotiations and ceasefire talks? Have we heard anything from any of the parties involved?
Yes. So, and I think that's a really important question here, because what has emerged has been an explicit linkage between what is happening now in Lebanon and the situation in Gaza as well. You heard once more from President Biden over the weekend saying that the U.S. fully support Israel's right to self-defense, but at the same time, it is time for a ceasefire in Gaza and a ceasefire in Lebanon. You even heard from the Lebanese caretaker prime minister. Remember, it's a caretaker government at this point. Over the weekend, he's been largely absent over the last 10 days, and he said that Lebanon would like to see a ceasefire, and Lebanon is ready to implement UN Resolution 1701. And this is the resolution that I spoke about on Friday that came as a result of that 2006 war, stipulating that Hezbollah retreat from the border and lay down their arms. And it's difficult to see Israel accepting any ceasefire unless they feel that Hezbollah are willing to step away from the border and cease firing rockets into northern Israel.
Joanna, where are people going? Those that have been displaced, where are they going?
Yeah, so the Prime Minister, in the comments that I just mentioned on Saturday, mentioned that there are up to 1 million Lebanese displaced people in the country now. The World Food Organization has said that this is the beginning of a humanitarian crisis. People are spreading out throughout villages and towns in Lebanon. They don't have anywhere to stay. They're sleeping on the roads. They are sleeping in their cars. They're sleeping close to the sea. People think that staying close to the coastal area will provide some form of protection. There has been limited support by the government, and even though I spoke to the Lebanese economy minister on Friday, they said it was a priority of theirs to provide the support that is needed. They have enough food and supplies and rations to last 4 to 6 months. That doesn't appear to be the case in terms of allowing those rations to be supplied to the people who need them, and therefore there has been a big push from these humanitarian NGOs to step in and help alleviate the situation that many of these displaced people are going through. And just to give you some context here, during the Syrian uprising, what you saw is hundreds of thousands of Syrian refugees come into Lebanon. What has happened now is many of those Syrian refugees have decided to go home because Lebanon can't provide the shelter and the security that those Syrian refugees needed.
Jumana, thank you very much indeed. Bloomberg Horizon's Middle East and Africa anchor Jumana Basetchi joining us on the situation in Lebanon. Quick update on what is happening in the auto space here in Europe. Stellantis has just reopened. It's down by nearly 13%, 12.5%. That car stock weighing heavily on the French market. For instance, Renault is down by nearly 6%. Volkswagen's only down by circa 3% at the moment. But still, this is a sector as a whole is down by 3.5%. Some big losses being reported within this space. The entire sector, including Ferrari, down. Even Ferrari is down by 1%.
We should mention in the context of the car maker space, there is a report out from an Italian newspaper, Il Sole, talking about a joint meeting between the heads of both Renault and Stellantis. Rumors of a merger, big emphasis on rumors here. I wonder how much of that is being played into at least the sentiment surrounding some of the stock.
There is some talk as well about the fact that there needs to be cooperation in terms of the EV story and how much platform sharing, etc., there needs to be done in order to make this a viable next step, because they're all struggling to do it individually.
They absolutely are, and that's going to be something we monitor throughout the week as well as we hear from not just the automakers, but of course from several other companies, not to mention what we get out of some of the central bank speak as well. We're going to get a taste of that today with Chair Powell and both Christine Lagarde, Madame Lagarde, speaking both today at two different conferences. But it feels like it really is a countdown to payrolls on Friday. That seems to be the highlight, despite several pieces of data that you are seeing. Euro area PMIs coming up. We're going to have Euro area unemployment. China Golden Week starts tomorrow, so those markets will be closed. We're going to dive into the China story in just a moment as well. We haven't really talked about the U.S. VP debate, though, and this is going to be one that I find interesting.
Why? What are you watching for?
I'm watching for just how much of a policy story we're going to get, not out of Tim Walz necessarily, but more out of J.D. Vance. And the reason I say this is because one of the concerns on the U.S. political sphere is how much of the J.D. Vance kind of more right-leaning MAGA agenda affects what Donald Trump says or might do were he to win a second term. And I think that kind of bleed through is pretty interesting from a policy agenda. It's not really something you can talk about with Tim Walz, but with J.D. Vance, I think it's an interesting one.
We'll watch for that a little bit later on. We'll have some great coverage coming up of that VP debate in the United States, setting the tone maybe for the politics story for the rest of the week. What is certainly setting the tone for the week here in Europe is what is happening with Chinese stocks entering a bull market. We've got another day in which we are seeing some of these beaten up stocks really pushing forward. Tom McKenzie joining us around the table to wrap up the conversation. Tom, we now go on holiday. Mm-hmm. Is this the end of it? Was this a kind of run into the holidays and then we get a different picture after the holidays? What is the read in terms of people's estimates as to kind of how much momentum there is within this stock story?
Yeah, look, I mean, the superlatives have come thick and fast. There's still a lot of cash on the sidelines, so there's still investors that can get exposure to the domestic markets and the Hong Kong listed markets as well, the A shares and the H shares. How further it goes, I mean, there's a lot of analysts out there saying that this still does have legs, including many of our team at MLive. There's a question between the short-term impacts on the equity markets that may have further to run, given how much caution there has been in the markets and the value that still is there for many investors, versus what it means for the economics of China longer term and the need to embed some of this and get those structural changes and the shift to the consumer, and those are bigger policy items that need to come through. But it seems like at this stage that a lot of people have not expected this to run as far as it's run. And one section of the markets that's under pressure is the banking space in China because they're doing the heavy lift.
We're certainly going to keep an eye on that and see how this all shakes out. Right now, Europeans not really putting up with the same risk sentiment, the risk rally you saw over in Asia as well. Tom McKenzie, we thank you so much. That does it for the opening trade. The Pulse is up next. Stick with us. This is Bloomberg.